Okay, we got 30 minutes until the bell, end of the day, end of the week. Mr. Kevin Green back with us after fishing in Alaska. Now he's whale watching in markets again. I guess maybe you were doing some whale watching up there too, KJ.
Yeah, I saw a couple of whales out there.
Nice. See any whales today in the market making world? What do we? That's pretty much what this is.
Yeah, so let's actually talk about the open interest first, Albert. I think that's going to be the very interesting part here. We saw the market kind of slide down to that 5,500 level, and that's where a lot of area of risk was actually happening for the market, not only just for today's expiration, which it is a monthly expiration, but when you're looking at the overall open interest across all expirations, we saw on this histogram here this big red candle. That red candle there is just signifying the amount of risk a dealer may have, and this is an assumption, a dealer may have if the S&P 500 moves below that level, especially moving more than 5 points to 8 points below that level. So we did see some buyers stepping in, but just for some context here, there's around $26 billion, $26 to $28 billion worth of gamma risk there for every tick that the S&P moves down to the downside below 5,500 on a theoretical basis. Let's equate that to around 46,000 contracts that dealers would need to actually sell in order to hedge themselves to the downside. And as we got farther and farther away, or as we get farther and farther away for right now, they would actually have to increase that. So we did see some buyers actually stepping in here. That's the right move to make, especially if you are looking at this market right now. And we're really actually close to a really technical level too. We're sitting at around 54.80. So you kind of have a little bit more wiggle room. We are in negative gamma territory. Unfortunately, we are in a situation where dealers are offsides. They're selling with institutional traders. And we can see that on that chart too. That blue line basically showing everybody that's all of those strikes that we have on that histogram today, we're in negative gamma territory. And we can actually see it also with this chart here where buyers did actually step in, but we're not out of the clear yet. We had a nice little bounce to the upside. If you're kind of looking at it, 55.20 to 55.30 could be that sweet spot for the close here today, but we could also have pen risk at 5,500. So we're not out of the woods yet. And it does appear, even since we actually just started this segment about 3 minutes ago, that we fell around 6 or 7 points. So 5,500 still is on the board going into the close. That would be kind of your meltdown scenario. Melt up scenario from these levels would be around 55.30. That would kind of give you at least a sense that the market was able to recover instead of seeing this constant selling throughout the day.
Kind of seems like then we should be looking for probably further action to the close than of at least 10 points in one direction or another. Fair enough then, right?
Yeah. Correct. Yeah. And so when you're kind of looking at it going into the close here, we can actually talk about the volume side because that's also going to be very interesting. Now, just to highlight, the volume that we are seeing today, when you're kind of looking at the histograms and things of that nature, is going to be a little bit distorted because we are in such aggressive negative territory. But the volume side, 5,500 puts were printing literally all day since the market opened up. Around 20 minutes into the market space, we actually did see some institutional buying happening at that level. So it's not a coincidence that we did see this market kind of gravitate towards that level. What you would like to see is, once again, kind of a bounce to the upside, a balance area, that area of neutrality, if you will, at least on a volume basis, is sitting at around 55.25, kind of that range that I was telling you there. And then positive gamma, 55.35 at this point in time. So we're kind of not, once again, not out of the woods yet here. Pen risk is definitely there, but it's nice and encouraging that you did see some buyers stepping in at 5,500. If we can actually do that one more time, that might actually shake out these short sellers, and hopefully that could create this gamma squeeze to the upside going into the close.
Okay, and it's pretty unlikely that we would crack through 5,500.
I mean, anything's possible.
Right.
So
right.
But
given that's where all the exposure is, they're going to really defend that area.
It would be a hard task for them to do so. Now, this morning, 54.75s were also printing along with those 5,500s, but I haven't seen those flows show up in about 3 or 4 hours. So we can kind of negate that fact for now. But it would be a fairly hard task. Now, once again, you got about 5 points worth of wiggle room. So if you go to 54.95, that's when you can see a significant sell-off to the downside. Now, if we can bring that volume chart up just one more time, because there's another thing that I wanted to highlight. About a week ago, last segment that we did on Thursday on 7-Eleven day, and you got to get your free Slurpees on that day, by the way. But we highlighted the fact that we had this sell-off level. Right. And so when we talk about these intraday levels in this market, they don't really go away. There's still key areas of support and resistance. And we actually saw that when we knifed through that level actually yesterday, that's when we saw this consistent selling, used it as an area of resistance, and then continued to flow down. So that's another area, once again, that you want to kind of look at as a resistance level to the upside. But when we kind of talk about these balance levels or these negative gamma levels and things of that nature, you don't just throw them away the next day. You continue to keep those on your charts, because tactically, especially from a dealer standpoint, they're looking at those levels too. And that's where this indicator, if you will, is really helpful. What are institutional flows looking at, and how can you kind of mirror some of the action that they have within the market when it comes to covering short positions or even trying to go long?
Okay. All right, love it. Seems like we should be, in a little bit for some fun. I mean, we might have already got it. We literally moved now like 13 points since this conversation started. So we literally said we should, okay. Hey, real quick before you go, let's look at VIX real fast as we finally got some action there. What do you think, KG?
Yeah, so I wanted to just kind of highlight the VIX curve and just knowing that we are technically in a backwardation scenario right now, meaning that the spot VIX, or the VIX that we look at on a daily basis, the spot VIX is actually higher, or printing higher than the next contract or the futures contract that is active right now, which is the August contract. That small backwardation is something just to be mindful of. That does just indicate that we have some near-term uncertainty and that we might have, once again, some volatility in the market, which is obviously what we are seeing right now. But I have two other areas that are highlighted here. It's going to be hard to create an overall backwardation of this curve, Oliver, because we have the election premium that's being built into the October VIX contracts. And then now, after the events that happened on Saturday, unfortunately, we also now have a spike in the January VIX that's elevated as well. That's going to be your certification risk. That's also going to be your inauguration risk. So really trying to get an overall backwardation to go throughout the VIX curve will be difficult, because those two levels will probably most likely automatically move up and create this disjointed scenario. So throughout the remainder of the year, focus on the first two contracts of the VIX and kind of negate the October contract and the January contract, because they're in a move on its own. They're partying by themselves right now, and it's not going to be a really good indicator for those that actually use this for a swing trading over 2-3 weeks.
Great stuff. A great alert there, and also a little bit frustrating to see we now have election certification risk baked into our markets. Okay. Welcome to 2024. Thank you, Kevin Green. Great stuff.